Hi, I'm Scott Schubert. For the past several years, I've been talking with hundreds of Forex traders from around the world, and in the process of training professional traders who trade for their sole source of income, I've had the opportunity to speak with hundreds of traders individually, and I've had them demonstrate to me their process of thinking, of when they enter a trade and why, so that I can discover if they are having any challenges, what they might be. And in the process, I've discovered that there are two very simple things that you can do to become a total master of Forex trading. And those two things are, one, enter a trade when there's an entry signal, and two, exit a trade when there is an exit signal. Now, this may seem extremely simple, but why is it that so many people do everything but those two things? One of the traders in our Platinum Trading Group recently said in our live webinar, "It has been my experience that if we ever don't get profit, the reason is always our own fault and not the fault of our trading method." I asked another trader who had just gotten a 100% increase in capital over the last 2 months, "What are you doing?" And he said, "I'm entering a trade when there is an entry signal, and I'm exiting a trade when there is an exit signal." And we laugh because that's something that I say every day in our live webinars. But why is it that it's considered extraordinary when someone does that? Many people already know that our trading method is extremely profitable, and that's well established and not in question. But the people who don't have extremely good results are usually doing one or more of these four things. One, they are entering a trade when there is not an entry signal. Two, they are not entering a trade when there is an entry signal. Three, they are exiting a trade when there is not an exit signal. And four, they are not exiting a trade when there is an exit signal. Now, the reasons why people don't do these two things and instead they do these other four things are wide and diverse. One person will look at the trading method and say, "This is too simple. I want something more complicated, and this just doesn't interest me," and they go off and do something else. Another person will look at the exact same trading method and say, "This is too complicated, it's too difficult, I can't learn this, so I'm going to go try to find something that's easier to do." One person may just decide to use some other trading method, or a person may decide to start entering trades for different reasons other than using our trading method. People may form some kind of opinion or judgment, or have some kind of emotional reaction or negative opinion about their experience before they really test this out, and the end result is that they don't do these two things and they do one or more of the other four things. Some people don't enter a trade when there's an entry signal because they're afraid, or because there is uncertainty in their minds, because they don't know for sure if a trade is going to go in their direction. And the truth is, if that's your reason for not entering a trade, you'll never enter a trade, because you will never know for sure that a trade will go in your direction, right? There is always a risk in entering a trade, and every time you enter a trade in Forex, there's a risk that you could lose. Likewise, some people exit a trade, a lot of people exit a trade when there's no exit signal because they're afraid of losing the profit that they already have. When if they look back over time and test this process on historical data and forward test it in real time in their demo or live accounts, they will see that if you're entering for the right reasons, if you're entering winning trades, then you should exit when there is an exit signal. Otherwise, you're consistently cutting your profits and your losses remain the same size. There is a very small percentage of this process that actually involves understanding what an entry signal is from an intellectual standpoint, from a standpoint of looking at charts and using technical analysis. And most people think that the entire process has to do with understanding what is an entry signal, when in fact, most people will come to the point where they do understand what an entry signal is, and yet they do one of the four things. They don't enter when there's an entry signal, and so on. But there is some work and practice and experience that is needed in order to recognize what an entry signal is. And during the process, there can be some disagreement from one person to another, that one person may say this is an entry signal, and another person may say, no, I don't consider that to be an entry signal. And that's what we do every day in our live webinars, in which we enter and exit trades in real time. But the primary reason why some traders do extremely well while others don't is because the traders who do extremely well enter when there's an entry signal and exit when there is an exit signal. And they don't make up reasons to not do that. Since this is a big percentage of what creates success in Forex trading, we continue to explore how to overcome this challenge. The first step is to recognize that you are making up reasons to not do these two things, whatever those reasons are. You may feel that your reasons are quite legitimate, but you are making up reasons to not do these two things. And when you recognize that, then you can begin to overcome it. You can use hypnotherapy, NLP, affirmations, or just use your own inner strength and force of willpower to start doing those two things. If you aren't getting extremely good results in your Forex trading, well, just start coming to our live webinars and ask some of the traders there. Ask your own colleagues to help show you why you're not doing those two things and why you're doing one or more of those other four things. If you're serious about the Forex trading business, this is an essential step toward your long-term success.